Hello, everybody. My name is Trey Archer, and I'm the Director for Asia at GRESB, the world leader for ESG scoring and benchmarking for real assets. Today, we will be speaking about green financing and loans for this episode of Apria Real Assets TV. We're hearing more and more about this ever important topic, so I'm very excited to get into more detail with our panelists. That said, we have an all-star cast of ESG experts on the panel today, so let's not waste any time and get started. For a brief introduction to everyone, first up, we have Vinamra Srivastava. And Vince is the Chief Sustainable Officer at CapitaLand, one of the largest developers, investors, and managers of real estate in Southeast Asia. Vince?
Thank you, Trey, for the kind introduction, and thanks to Apria for assembling this session. It is my absolute honor to be here amongst the fellow panelists. I am the Chief Sustainability Officer at CapitaLand Investment. I must confess that I took over this role very recently, only a few months ago, but it seems like ages already. That's how fast things are moving here. Before this, I was the CEO of our India business, so I was posted there for the last 4 years. Prior to which I was actually the head of group strategy for Singbridge before we merged with CapitaLand. So I've been with the firm for 7 years. And I think one of the reasons why I was sort of pulled into doing this is because at CapitaLand, we are trying to integrate commercial and business exposure and experience with sustainability leadership. So my predecessor came with the same pedigree, and I'm trying to continue that because for us now it's about forming the right business models to make sustainability real on the ground. So I'm very excited to be here and can't wait to engage with all of you. Thank you.
Great. Thank you so much, Vince. Next, we have Rajesh Khushalani. Rajesh is the Principal for Investments and Asset Management at HDFC, one of the biggest banking and financial services companies headquartered in India. Rajesh?
Thanks, Trey, for the introduction, and it's my pleasure to be here, and thank you to Apria for inviting me to be part of this panel. Like Trey mentioned, I am HDFC Capital is one of the subsidiaries of HDFC Limited, and HDFC is one of the largest financial services groups in India. We have the HDFC Bank, we have HDFC Limited, which is a mortgage lender, and various other we are in HDFC's Standard Life, which is a life insurance company, HDFC Ergo, which is in general insurance. And I'm part of HDFC Capital, which is focused on, which is the private equity arm of the HDFC group, focused on investing in primarily, as on date, in residential sector in India. So you'll hear more about what I have to say later. Thanks, Ray.
Thank you very much. And last but certainly not least, we are very excited to have Tracy Wong Harris. Tracy is the head of Sustainable Finance Asia at Standard Chartered Bank, one of the world's most reputable multinational banks with operations in consumer, corporate and institutional banking, treasury services, and much more. Tracy?
Thank you, Trey, for the kind introductions. Delighted to be here sharing the panel on a topic that I'm absolutely passionate about in driving sustainable finance. So with my day job, like Trey said, I am the head of sustainable finance at Standard Chartered for Asia. So I'm in charge of all the sustainable finance transactions in the regions across thematic, I call it from green to rainbow, and also across product sets. And I'm also the Deputy Secretary General and Vice President at the Hong Kong Green Finance Association. So I work closely with the governments, regulators, and the industry to drive the sustainable finance agenda in the regions. And just to add a little bit more on this topic, I'm also leading a green building project for the regions, which we look at benchmarking on all the green building certification and look at policy funds and incentive from the building sectors, and we are publishing the final report, deep dive into the Greater Bay Area as well. So looking forward to share a lot more and a great conversation.
Right, thank you, Tracy. That sounds very interesting. That's very good to note. And I guess staying on that subject, before we get started with really today's conversation, Tracy, I'd like to stick with you. I think it would be good to know why all of this is important. So why is the topic of green finance and loans even need to be discussed in the first place?
I think this is a very good kicking off points for this session. So as of now, as we speak, there's close to 140 countries have announced or are close to consider net zero targets. And this is close to 90% of the global emissions according to climate actions. So what do we need? Looking at where we are now and the funding gap we need in order to transition to net zero, we are looking at over 100 trillion US dollar. And this number keep going bigger and bigger. The latest one I saw is around 150 trillion additional US dollar in sustainable investment we need in order to fill this funding gap. And this kind of thematic, I think that our topic today is on green financing, green loan, but I just want to call it out now that we are talking about in order for us to transition to net zero, it actually cut across thematic from green to rainbow. So the market started with green financing, green loans and green bond. It evolved into GSS, so green social sustainability, which is just mix of the two. And to the latest, we have seen a massive, tremendous growth in sustainability linked loan segments to the latest transitions. So I call it cut across thematic, green to rainbow. So happy to share a lot more details. I'll stop here.
Great, thank you, Tracy. I think on the topic of big numbers, I do know that CapitaLand has received actually the largest green loan in Singaporean history. So Vince, I think that's a good probably time for you to jump in and maybe tell us a little bit more about that experience.
Well, that was way back in 2018, Trey, where we secured our first sustainability-linked loan from DBS Bank. At that time, it was $300 million. And at that time, it was the largest SLL in Asia's real estate sector. Of course, after that, it has become more mainstream, and there are many more and larger loans that have been raised. For us at CLI, overall, I think since 2018, CLI as a parent company and all our REITs and business trusts under our umbrella, we have altogether secured almost 11 billion Singapore dollars of sustainable financing. And we've done that by partnering through more than 18 financial institutions. And the nature of these financing are of different types. So we have sustainability linked loans, we have green loans, we have SLBs, we have green bonds, we have green perpetual securities, and maybe later I can share a bit more detail on the nuances across all of these. But I would summarize by saying that what these big numbers indicate for CLI is that for us, sustainable financing is a key lever in our decarbonization journey. And we strongly believe that it not only raises our industry profile as a thought leader, but more importantly, it actually provides on the ground tools for us to be able to experiment and push a lot of solutions that otherwise would have been tough for us. So we look at sustainable financing very strategically and not just as another tick in the box and a good news release, but it is very, very well integrated as a key lever in our carbon mitigation hierarchy.
That's interesting. And again, some very big numbers coming out of that as well. And I can only imagine that will get bigger and bigger as the decade moves on. Rajesh, from your end, do you have any big numbers to speak about as well? Or maybe you can tell us a little bit more about the experience that you have with green loans and bonds.
Sure. So I'll break it up into two parts. One is, like I said, our parent company, HDFC Limited, which is the largest private mortgage lender in India, or possibly actually the largest mortgage lender in India. And what HDFC Limited has done is that it has provided mortgages of about $2.45 billion for green residential buildings. And that is about 19,000 odd units where the buildings are green. And also HDFC Limited is a big financier of commercial properties. So it's something called lease rental discounting, where they finance commercial buildings, and 75% of the buildings. So the lease rental discounting book of HDFC Limited is about $5 billion US dollars, and 75% of that is green commercial buildings. So there is, from our parent company, there is focus that they should promote green financing, green loans, And when it comes to HDFC Capital, the subsidiary, we raised our first fund in 2016 with no focus on ESG. But we saw that as a private equity manager, when we reached out to investors, they wanted us to focus on ESG. They wanted us to focus on different aspects of ESG. So we've changed our strategy. Our second fund, which was about $700 million raised in 2018, and it is ESG compliant. Our third fund, $1.2 billion raised in January of this year, ESG compliant. And our fourth fund of $400 million, which is raised only last month, is also ESG compliant. And these are the funds raised, but the funds deployed is about $1 billion, US dollars, which are in ESG compliant projects. So we understand that this is the way forward, and this is what our investors whose money we are managing, they want us to have a serious focus on ESG, and we are ensuring that we get there. So, and the numbers are big, but we need to also make sure that we have an impact with those numbers.
Great, thank you, Rajesh. That's very interesting. And actually, Tracy, I want to circle back to you on that. I mean, again, speaking of these big numbers, I mean, we're seeing, just a lot of activity in sustainable loans and investments and whatnot. But I guess from your experience, from the lending point of view, is there a funding gap between lenders and borrowers? Or if there is one, how big is that? I mean, is it as big as some of the numbers we're hearing? Or maybe you can just tell us a little bit more about that.
Sure, absolutely. Since we're on the numbers, let's write on that. So earlier I quoted, so in order for us, the world, to achieve net zero, the global funding gap's about over 150 is the latest that we saw. And into real estate, per IFC's latest report, it's quoted green building segments. It requires another 25 trillion US dollar, and 18 trillions belongs to Asia alone in the green building sectors. So this is the numbers in real estate. Now, let's look at where we are currently. So if I look at the global green and sustainable finance debt market, last year it hit over 1.7 trillion US dollar. And then the growth, it has gone through tremendous growth over the last 10 years. And if I look at 2021 compared to 2020, the global growth were doubled, and in Asia, tripled. Now, if I look at how the real estate fare out in this market, so the whole of real estate contributing to the market, about roughly 10% of the market. But looking into the funding gap, like you mentioned, this is a $25 trillion funding opportunity or funding gap in front of us in the building sectors. Now, I want to track back to why into this, why is such a big segments from the building sectors. Let's take it back looking at the carbon emissions contribution. So for the building sector in operation and under construction is contributing to 39% of the world energy related carbon emissions. So concrete cities like Hong Kong, Singapore, Mumbai. So these cities, the number will even be bigger than that. So you can see how big the problems, and also at the same time the huge opportunity in front of us in the building sectors.
Wow, that's incredible.
In fact, Trey, if I may just add to what Tracy mentioned, why it is so critical for real estate, two statistics. The global floor area globally is going to double by 2060, right? To put it in perspective, the world is adding an entire New York City worth of office or building space every month for the next 40 years. And the second data point on why the ESG part becomes even more complex is the high share of older buildings in this portfolio. And just as a proxy, if you look at the gateway cities in APAC and the prime office buildings, almost 65% of them were built before 2005. So they're already more than 15 years old, right? And older, you can assume that they are less green, right? So you put these two together, the scale and the penetration, and that sort of highlights the gap that I think Tracy was mentioning for this sector. Yeah.
That's fascinating. So would most of that growth be coming in Asia, or is it dispersed across multiple continents and multiple regions?
Oh, it's definitely faster in Asia, given the smaller base. and given the under penetration. So yeah.
Wow. Yeah, that's fascinating. I think that being said, let's take a break from the numbers and let's move into a few letters. As fascinating as that is, but I think we could spend a whole nother episode just talking about that, but we do have so much to cover today. So Rajesh, when thinking about ESG, look, we just talked about some of the numbers, but let's dig into the three letters that are the most relevant when it comes to ESG, which are the E, the S, and the G, sometimes in that order. We're all very familiar with the E, but a lot of us also forget that there's an S and a G in the acronym as well. So for your line of work, are there any factors from social and or governance that get incorporated into your green loan negotiations as well?
Yeah, yes, Trey. So what we do is that when we are financing a project, we get the developers to focus on all three aspects, which is E, S, as well as G. And because you requested me to speak on the S and the G, in a lot of the projects, the S is very relevant. And I'll tell you how it is. There could be cases of displacement of people because you're trying to acquire the land. There is, so you need to rehabilitate the people if you are acquiring land where the people are already staying and they are not willful sellers, or you're getting them to move somewhere else, or you're getting them to move on one of the corners of the plot which is getting vacated by them, which we call, we have a lot of slums especially in Mumbai. 50% of Mumbai is occupied by slums. So there is a lot of social angle which gets involved when we look at projects, especially in Mumbai. And it could also, and there are even in other parts of India, there is a lot of farmland is acquired to develop residential projects, or even could be commercial projects. But my focus, because our funds are primarily for residential developments, so my focus is on residential developments. So when you acquire farmlands, then there is a possibility that you need to rehabilitate the people whom you're moving out, especially when it comes to slums. The rehabilitation is more in the case of slums. So that is a social angle that we are very cognizant of, and the projects we invest in, we want our developers to be very cognizant and take appropriate steps to address issues which may arise. Similarly, when the construction is going on, the health and safety standards need to be the best. If there are any accidents, they need to be reported. They need to have the best measures in place. We ensure that there are creches for children, on every site which we finance, so that the children get at least if the laborers' children get decent facilities while the laborers are at work. So we ensure that a lot of these social aspects are covered and are provided for in the projects that are financed by us. And when it comes to even there are lot of these cultural aspects of, if there are any heritage monuments or anything on the lands that are getting vacated, then we ensure that that is being taken care of as best as it can be. So this is all there in our documents with our developers, that if you're financing then you all need to ensure that all of this is addressed.
That's great to hear. I know The Economist ran a piece just a few months ago saying that the world should only look at the E and forget about the S and the G. But I do want to stress the importance of the S and the G as well. And I think just for some of the points that you've mentioned, that just shows how important it is, especially just preserving culture and people's livelihoods. So it's great to see that people are still sticking with the last two letters as well.
So in fact, sorry, I'm just, I forgot to mention one thing, and I was just looking at my notes now. What we also do is that the laborers who are at our sites, the government of India is providing, accidental insurance and many such facilities free of cost to laborers. But a lot of laborers actually are not aware that the government of India is providing that. And you need to go through a registration process, which costs about $10 US. And so we ensure, we try and see that the laborers which are at our sites, and we pay for that 10 US dollars per laborer, each of the laborers which are there, and they get access to a lot of the government benefits, food as well as health insurance, life insurance, all for free. So that's the other thing that we try and get into the projects that we finance, which is over and above what we request the developer to do. So the last initiative is an initiative of HDFC Capital along with a non-government NGO, non-governmental organization, with their help.
Wonderful. I'm sure that truly makes a difference. Great. Thank you so much. So sticking with a few other letters with our letter theme right now, apart from ESG, let's throw KPIs in there as well, since targets and KPIs are also very important. So Vince, when you're negotiating the terms for these loans, I mean, what KPIs or frameworks or targets are contemplated?
So from our experience, Trey, of the $11 billion that we've raised so far, I think if I try to summarize, I'll probably try to do it in three categories. The first categories of KPIs are essentially the loans being pegged to our sustainability performance in globally renowned indices, and you are part of one. So the two most common ones are GRESB and DJSI, right? So GRESB, I mean, needs no introduction in this sector. It is the absolute benchmark globally that rates companies on their sustainability performance. And I'm glad that we've been a long-time participant. Even in 2022, we maintain our highest 5-star rating that puts us in the top 20% in the benchmarks globally. So as long as we perform and achieve a certain minimum ratings on GRESB, we comply with our targets, and according to that, the interest rates of our loans can actually come down, right? Same is with another index like DJSI, right, which is the Dow Jones Sustainability Index. So some of our loans are pegged to that. We have maintained our listing as a world leader on that index for more than 10 years now at the World Index. And again, our presence on that index gets us interest rate savings on the sustainability linked loan, right? So that's the first kind of criteria. And I think the reason why that is the most prominent is because platforms like GRESB and DJSI are world renowned. When banks and lenders subscribe to those as the benchmarks, they can rest assured knowing that the underlying methodology and the strict criteria will be met, because that's how widespread they are. So I think that's a very safe benchmark to adhere to. The second kind of criteria that we have in our SLLs and our loans are, for example, a minimum green building certification level. So let's say I take the financing for a portfolio of assets and I commit that I will maintain X% of that portfolio at green rating level, then that can mean that I meet the criteria. It could be a minimum percentage of green, or it could also be a minimum rating level of green. I think that can differ, but essentially making sure that the underlying portfolio is green rated. And then there's a third level, which right now is small in our portfolio, but I'm quite sure it'll become more and more nuanced, is targets directly pegged to reduction in carbon, energy, and water intensities, specifically linked to our 2030 master plan, because we have laid out quantified targets of how we want to reduce our energy, water, and waste intensity by 2030. So we can have loan terms pegged to that. And of course, it'll be calibrated from now to 2030. And if we perform as per those pathways, then the interest rate gets adjusted as well. So for SLLs, I would say these are the key criteria and the KPIs that we typically have. Of course, the other kind of financing is really green loans, right? And green loans are different from SLL because in an SLL, sustainability linked loan, as long as you meet these KPIs, the usage of proceeds is not restricted. I can use those proceeds for general corporate use. Whereas in a green loan, that is not the case. In a green loan, the use of proceeds is already identified, and I can only use the loan proceeds in a certain green project, which is agreed between the borrower and the lender. And there, the KPIs are even more clearer, because the loan itself is meant for a green purpose. So then you can easily define what that green project means on various parameters and agree upfront. So I think that's sort of the landscape of how at CLI we approach the KPIs.